All right, guys, I assume you can hear me. Go ahead and give me the thumbs up in your question answer box. Welcome to the Trade Findings and Adjustments on September 10th, 2019. I'm Keith Bybee, and let's get started. So we've got several things to look at, and I just wanted to quickly go over a few charts and pinpoint something that might be useful for a trade recommendation. So, all right. Looking at a chart for Baidu. Put this more towards the center. You guys can kind of see all of the things that are marketed to me here on the side, but that's all right. Just looking at Baidu. So Baidu had this level of support here, just over 100. Had an update Monday and held 105 and started to take off today all the way up to 110. So technically looks like a nice breakout there, and it's kind of one of those it's about time sort of things. Reason being is, we've already gone through some up days in the market from the news schedule on China trade deal supposedly happening on, or discussions rather, on October, beginning of October. And Baidu, when that was announced, really didn't move a ton. Finally is looking like taking a breakout, and I would expect it to go to our next resistance level, which it looks like is around 115. So I'm just going to list a few things here. Breakout above 50-day moving average. And looking to go up 115-ish resistance. So that's that one. Let me look at Under Armour. Under Armour found a bottom way down here around 18 and started heading back up. Now, correct me if I'm wrong. I thought Kevin may have suggested a covered call earlier last week on that. Maybe I'm thinking things, so ignore me if I'm full of it, but that might be something to look at. Let's just go for Under Armour. I'm going to say a support of around 20 and room to run up to the 200-day, that red line there. Let's see. DMA, of course, day 50-day moving average. All right. What else? I was looking at Ford, which is really interesting. So check out Ford. Could not get over our 50-day. I mean, it's like total technical movements, which is, believe it or not, more of a positive thing for me because definitely shows that our institutional trading is looking at the same kind of things we're seeing here. So couldn't get over the 50-day at 953. And let me go down and annotate again, just for fun. Couldn't get over here. Support right at 903. I know we had some period in here where we got down to 880. But on essentially technical movements, I'd say this is an interesting one to look at. So I'm going to say Ford. Technical bounce down from 50-day and support at 200. All right, so what else? Visa. If you've been paying attention to Visa, you may have noticed some really weird drops from Monday and today. So Monday, it looked like it held at 180 and bounced quite nicely off of it. And today had held a support level of around 175. But there's essentially nothing that is telling us why that's going down. There's no news. I mean, unless it's like people worried about Apple, the Apple Card doing well, and that being a MasterCard win, but MasterCard was down yesterday as well. Let's see where they're at today, just as yeah. So MasterCard was down too. So I'd say that's probably not something worrisome there as far as anyone thinking that MasterCard's going to take business away from Visa. So what could it be? With no news and two big drops on a day like yesterday and today, I'd say the only thing moving that is institutions taking profits and doing something else. I'll just say big money because there's all sorts of institutions. With Visa, let me get back to Visa because I don't care about MasterCard right now. I'm going to say taking profit from a fantastic performer this year. So I think this is plenty to look at. Let's just look real quick at Apple. Actually, before that, while we're on Visa, let me just annotate some things just so you guys see. Saying something like this. It's kind of a price channel there, and it was kind of weird to see that break today on this one falling. But it did hold the support level, I would say, at 175. But either way, it was kind of weird and not really any rhyme or reason to it other than what I've said. So just kind of keeping that in the back pocket. I don't know if we'll do anything with that, but I'm just kind of going through some charts here and thinking out loud. So here's Apple. You probably heard Kevin talk Monday about, I believe he linked a chart, or excuse me, an article about on average, Apple will drop about 1.5% after one of their big reveals, product reveals. And I think he accidentally said it was on Wednesday and it was on Tuesday today. And it started heading up, which usually right after it starts to head down. So that could mean that because there's a few new things, services, that kind of things that have come out, that maybe that might break that trend, at least for this time around. And it would be interesting the next day or two to see where that starts to head and if it starts to correct and drop down from 215 resistance level rather than holding it up at 216.70 where it closed. So Apple, I'm just going to say, let's see if it breaks the trend. One of the reasons, just as a note, I think it, I guess there was a little more positivity to break the sell the news traders on Apple today is Apple TV Plus. They announced it as a $5, of course they say $4.99, but we know that means $5. We're not going to get tricked. We're smart. $5 for their monthly subscription on Apple TV Plus. And they're giving it away for a year for free if you buy one of their products, which is great news for me because I'm getting a new phone soon. One of their new ones that came out that comes with or that they revealed today. Comes with 3 camera lenses rather, and it looks fantastic. What else did I want to say about that? Oh, and this explains why you may have noticed Disney down today, falling. You could say obviously technical bounce down from 139.45 at the 50-day, but holding the support level at 135-ish. So where am I looking at for a support level? This is kind of all over the place, but just going back a ways, you can go all the way back in, what is that, May. 135 here is pretty interesting support level, I would say. A few days where it came below it, but for the most part, and maybe 132.50 nearer term. But that's what I've been looking at, and of course, I'd like to see it continue to go up. Wouldn't everybody? But I'm just kind of noting that support level, and let's see where it goes. So I guess there's a few in there where I'm just kind of thinking out loud, and a few where I think might be worth looking at a trade. So let's say Disney holding support for now. All right, so thinking through a few trade ideas, you could do Disney and Visa. I would say maybe makes more sense to hold on an Apple, just because it's more important to see where they go the next few days. But why did Disney fall down today? From what I noticed, it was pretty much a reaction from Apple coming out saying they're going to offer their Apple TV Plus subscription for $5. And, there's some day traders worried. I guess I shouldn't say day traders, but there was some reaction movement to that from investors. My thoughts on that, just as a quick note, what does Netflix cost? Like $15 an hour or a month? Let's see. I pay for it, and I should know this, but I just want to be sure. Yeah. So premium, $16. Their standards, 13. So I'm not going crazy. All right, so let's add this up. $7 for so that's $7 for Disney's subscription. For Disney's streaming subscription. $5 for Apple. I'm just going to say TV plus, which equals $12. So you could have Apple and Disney streaming for about the same or less, depending on the plan, if you get premium plan, than Netflix. For 13 to 16 bucks. So you could have both of those. To be honest, I think most people are just going to buy all of them. And I guess what I'm trying to say is the likely one that would be dropped would probably be Netflix. Just because, you know, people have watched most everything. They'll get back on when something new is released and watch it and then unsubscribe again. But I think there's definitely more in Disney and Apple TV Plus than I think long-term benefit that Netflix might have. That's just some thoughts. So, all right, on to some trades. Baidu, I think if you're not doing anything in Baidu yet, a bull call is certainly reasonable. And we'll look at what we've got, obviously, so far. Under Armour, possibly a covered call. We've got Ford right in between the 50 and 200, and I think it might be interesting to think about short puts, naked short puts. Reason being is if you do take stock ownership, and we'll get back to Ford's chart in just a sec. If you do take stock ownership, if it breaks that $9 support level, you've got the October dividend payment and earnings that you could get into and do a collar trade with it if you really wanted to. I think that one's interesting. I would expect it to hold $9 and bounce around between 50 and 200, and obviously be hoping to get that short put for a profit. But if you're assigned stock, you can be in a collar trade or covered call, or and around October 20 I don't think they've announced it yet. I'm going to say October 20-ish, not October 20th, because we don't know yet. Wait and see on Visa. We really don't have a direction. We want to see it continue to hold a support level. See some other big money, see an opportunity. To get back into, put more money to work in Visa. Apple, I'm going to say watch for some follow through, excuse me. $2.15, right? So 215 is that resistance level. All right. Guys, any thoughts or questions so far? I'm just kind of going through all of our ideas, narrowing some things down. So let's look at Baidu for a bull call. Maybe it doesn't make sense for this account, but if you haven't added out in time calls on Baidu, I would say pull the trigger already. Go out in June 2020, 135s for right now are 588, which is pretty darn cheap. You can even go to, let's see, I don't want a chart, I want the options. It gives you, excuse me, June 20 gives you a year, a little under a year, obviously. But I was going to look at 120s. 120s get you closer to the money. You'll probably see it struggle to stay over 115 for our near term. But I'd say if you're just getting into this one, or maybe you took a profit or something before, or whatever the case is, I'd say a new one would be 120, as it's still just under 11 bucks. It'll probably be a little higher, closer to 11, if not past it tomorrow. But that gets you a little closer. If you remember, we had dollar cost averaged our 135s that you saw in this account down to a cost basis from, if I remember off the top of my head, was around $10 or $11 down to 640. See what it says for sure. I do 645 cost basis. So if you haven't rolled those down and you're following along with us, you can still do it. double up on your long calls and see that head back up to 115 and go from there. Of course, if we get a trade deal sooner than later, then we're obviously going to see that take off into the stratosphere. $120 strike. $11. Ida, your voice fades in and out. Thanks for the heads up. Let me just move my mic here. So what about a shorter term bull call? Well, let's just look at October. So you could do in the money bull call out to October. Let's look at October 25th. Gives us a little more time. $110 and $115. So this is a cool one, an idea, a little better than one-to-one risk and reward. Your short option pays for more than the long option, and you got $5 to see it head up all the way to 115. I kind of like this. Why would you want to do a longer term one as opposed to something like this? Because September, October are going to have probably some down days or weeks as they're cyclically known to do. So, but for this one, it gives us, thanks Ida, I'm glad I'm coming in a little better. October 25th gives us 45 days, and we have a 105 support level where if it bounces back down pretty quick, you have that short option to close, lower your cost basis. You have a breakout over the 50-day, which looks good. Let me take a picture of this guy and look at that. But obviously, can't hurt to go out further in time. This is one that if you're not doing anything with Baidu and you're really just looking to get in and out and do some quick profits, I would look at this one. And let's see. There we go. What the deal there is. Weird stuff happening. All right, let me try that again. There we go. So we have a bull call spread of an October 25th, 110 to 115. For about 227. All right. So there's a couple options on Baidu. Again, if you'd like to be in longer time, which is something I would lean towards, go for 120 out to next year, June 2020. If you're looking to get in and out and have more cash on hand, then this bull call spread is going to be for you. Under Armour. Go back just to remind myself here. Was it $20 to $22 upside ish? Let's look at a covered call. Not what I said. Yes, covered call. September monthly is expiring. That doesn't give us a ton. You get about 1% of protection and about $1 of upside with 2150s. Let's look at September 27th. That's a little more reasonable. September 27th. Wow. So September 27th, we can get if we go closer, we can get 21 strike at 53 cents. It gives us a little more. That gives us protection that heads back down to 19-ish. I thought is just going pretty close here to the money. I guess 2050 is in the money right now. So 21 would be our close one. Let me just look at it. Let's do this. That gives us nearly $1 of upside, which puts us close to getting up to that 220, or excuse me, 22, and seeing it probably struggle to get over that and booking a profit there. So I'm just thinking if it might not be better to go up a little further, but gets us closer to a $2, 22 upside. Oh, I kind of said that in a second ago, but I meant I meant 2150. So 2150, because we've got a 21 strike, 50 cents. I don't think that's bad. We've got, it's not showing our stock here, but 2075 is where it's at. I'm assuming it's going to head up a little more, but I kind of like this. Let me just go 20. Something around there. I'm just going to save that. Make Kevin look at it tomorrow. So you got the 50 cents minus the 75 is 15. Get a little more if it heads up, which I assume it will. Let's go down to 2020. I'm going to save that. And that is going to be limit debit. It's not showing us our stock price. So 2020-ish. Let me save that one. So, but again, that gives us 50 cents of a little bit of protection, and some decent upside there. Close to $1. All right. Covered call. I'm just going to take that out. Put it up here. All right. So covered call, you have your set a cost basis around 20 and 20 cents. Where if you sold or if you bought to open at around 20, $75, which of course you look at it tomorrow and make a different decision, see if the numbers work out. Obviously, you're going to get more credit if it does go up a little bit as well. As long as it stays around or under 21, that gives you, how many days was that? 17 days to be in Under Armour. See that expire or get called away. It's about 15 cents, 50 cents. And I'm giving it a little bit of a buffer to go around 2020. that's pretty close to the money. Obviously, you can adjust it for a little more room. But 21's right there. We're really just looking to see it go up to around 22, 21 and book a depending on what happens tomorrow, 50, let's say, trying to book 50 cents to dollar. So, which brings me to, if it's up above 21 tomorrow, and go up a strike and go to 21.50 or 22. If it's up above 21 tomorrow, I would look at 22 strikes to see if I can't get around 50-ish cents as well. If you can get that, then totally disregard this 21 strike and go for 22. Guys, is there any questions? Just look at Ford real quick. I know we're kind of taking more time today, but there's kind of a lot happening. So let's see, $9 shorts. I'm looking on the wrong side. $9, we're only going to get 10 cents. Let's look a little further out. October, it's not showing us, but we're going to assume it's around 18 cents. At October 4th. So I would look more at October 4th, and I would go 9 short puts. I won't bother doing a screenshot because it's just a short put, and not a spread. But you can get around 12, 13 cents. I would try and shoot for more on the side of 13, obviously, but that's what I would look at, and as many contracts as you're willing to take in hundreds of shares. If it goes down and you're assigned. Back here, Ford naked short put around at October 4th expiration for about 13 cents. So again, if you're assigned the stock, you can call or trade it, or put a covered call trade on and see if you can get a dividend around October 20-ish. Just make sure to keep an eye on the dividend X announcement date. Move this center. The DivX date is the day that you have to have stock ownership in order to be counted into the dividend. And obviously you can just wait. wait to see what it does as you get closer to October, mid-October, and just doing a covered call dividend strategy closer to that point if you don't want to do a short put now. But obviously that's going to be a trade recommendation closer to that time, and obviously go from there. What is the strike for forward short put? Fantastic question. Naked $9 short put. So really, to get any amount of worthwhile credit of a little over 1%, you're going to need to go to $9 strikes. On the bet that it is going to bounce off of $9. Move that $9 naked short put at $9 strike. For about 13 cents. Any questions? I know there's plenty of options here. If I was to choose one and had to choose one, and which one would be the best opportunity, I would probably say Baidu. So think through it and make your decisions based on that. But these are three pretty good options. Full call or long leap call on Baidu. A covered call on Under Armour. And a naked short put on Ford. And as far as what we've got in this account, we would be looking at, and if you're following along with some of these, a continuing trade would be to dollar cost average these $10 January 21 for leap long calls. We paid $1 for, and worth around 77 cents. So look maybe towards Thursday what Kevin is going to go over, but I would assume he's probably going to think about putting in some long calls, dollar cost average there, and seeing if tomorrow and Thursday we have a bounce off of 9. We didn't talk about Facebook, so I'll leave that for another time. Visa, if you're in 200 long calls, who knows, maybe it's a good opportunity at some point to dollar cost average if it keeps going down. But I would say leave it alone if you're exactly the way this is. Bank of America, I'm assuming we're probably going to get a good chance to close some of these leap long calls for a profit to lower, not lower our cost basis, but take a profit on a lot of these so that we can let some of the other ones run. All right, guys. Any other questions or thoughts or ideas? You'll have this hopefully posted sometime soon, either tonight or tomorrow morning. But if you want to take a look at them, get a screenshot now if you need to. There's our bull call on Baidu, covered call on Under Armour. And our forward bounce short put. Guys, I think that's it for me. I've taken a lot of time today, but hopefully there's some good ideas for you. And look forward to joining you with Kevin on Thursday. If there's no more questions, have a good night, and we will see you then. Good night.